Scale is the blockchain that's truly built different. Explore more at scale.space/ecosystem and follow them on X at Scale Network. Crypto's premier institutional conference is returning to New York on March 18th to 20th. We're hosting one of the world's best crypto conferences for institutional and professionals alike. It's going to be a ton of fun. I'm going to be there hosting a variety of different panels. I'll be doing a fireside chat with Mohamed El-Arian, a different macro panel with Jim Bianco and Joseph Wang. And we're also going to be doing a live forward guidance roundup there where myself, Tyler, and Quinn will be chopping it up live for the guys Emporium. So make sure to get your tickets. It's going to sell out quick. I know it. It's going to be a ton of fun. So come on out and yeah, just hit the link in the show notes and you can go purchase your ticket today. All right, what's going on, guys? Welcome back to another roundup edition of Forward Guidance. And in the dearly missed continued absence of Tyler, we had to pull in the big guns this week. We had to use our phone a friend option this week and call in the big guns. So we got Mike back, so we can formally bring back the guys Emporium this week. And Mike, we missed you, man. How are you?
The guys Emporium, guys. I've been looking forward to this all week. It's good to be back. It's good to be back, fellas. How we been
Good
doing?
to have you. This kind of feels like when you have like a sit-in or like an audit, like big boss comes down, from corporate and he's sitting there.
Yeah, I'm just, I'm a fly on the wall.
Yeah,
I'm a fly on the wall, fellas. I just want to see how it's done here. I'm taking my notes.
Yeah, I'm really nervous, honestly.
I see you're not wearing your MAGA hat today, Quinn.
Yeah.
It's like brushed up, right?
Yeah, exactly. Shaved, everything.
Yeah. It's like when you're in high school and and the principal comes in to watch your teacher teach.
All right, enough, fellas. I'm still one of the boys.
No, I'm excited, Mike. You've been deep in the crypto trenches, but you still chopping it up on the macro world. We're excited to have you for it.
Yeah, man, I'm excited too. Definitely been a little bit more in the weeds on everyone. Basically have a magnifying glass over everyone being down 80% in the crypto trenches, but I'm happy to zoom back up and talk macro with you fellas. Definitely better, actually. I think the vibes are better here for sure.
There's probably a bit more things to talk about, at least, than the doldrums that those alts are right now. But
everyone's just shocked. I mean, it's shocking that Fartcoin is down 80%, but
yeah, that is super surprising. Like the valuation is just so low here. Maybe there's deep value.
Well, in the short term, it's weighing a voting mechanism. In the long term, it's weighing mechanism, right? Fundamentals win out in the long term.
A couple more good earnings releases on Fartcoin, then it'll be up.
I did really enjoy at one point that Cliff Asness actually wrote about Fartcoin. I love Cliff. He's got a lot of good sass and interesting comments.
Mr. Asness writing about Fartcoin.
Actually shocked no one made that joke. Yeah, that's good.
That's incredible. This has been a big week for macro data. We can get into a few things, but the big theme for me has been the CPI print that came out this week. Came out hot by pretty much any way you chop it up here. So the big one for me was the significant upside surprise in core CPI. And this has been something I've been talking about for a while, and I'll bring up my favorite CPI chart here. But really, the way I characterize inflation right now is the tension between goods and core goods specifically is where most of the disinflation has come from. So, for the past 2 years, we've seen, things like used cars and the like come downwards. We've seen oil come from above $100 to where it's settling at now. And through that process, we've seen that obviously affect CPI very positively, especially from a headline basis. So that's been all well and good, but we started to get, as you see in this red line here, we started to get really, really, really low. Like there was a couple months of outright deflation on goods. And unless you're in a full-on recession, that's just not really sustainable. So it hasn't been surprising to see this rebound higher and starting to see some positive inflation prints from the core goods sides of things. So with that as context, if you're hoping for, lower CPI and to get to that 2% target, you really have to hone in on the core services side of things, which really buckles down to the shelter dynamic. And it's been talked about ad nauseum about this idea that, the way they measure shelter, owner's equivalent rent is a lagged metric. And the idea is that, the housing market is just basically dead these days. And, prices are coming down that much, but there's just no activity. And as that occurs, it starts to lead to this deflation or disinflation in owner's equivalent rent. And so, for you to be hoping for returning to this 2% target, you want to see this blue line continue downwards. And basically every CPI print is the tension between, okay, how much are goods rebounding as we start to go through this like cyclical upswing versus how much are the lagged components of shelter coming down. So the reason, I characterize today's or this week's print is that we saw a pretty substantial surprise to the upside in the good side of things, as you can see here. And the baton wasn't taken as nicely on the services side of things. So that's why we got this hot print. And that leaves, it's a difficult situation because, you could just, decide to use Trueflation or something like that, or swap out that lagged metric of owner's equivalent rent for, say, like Cleveland Fed has created this new real-time metric called like new tenant index. And you can swap that in there. And then suddenly it's like, okay, if we're using a more real-time metric, the inflation picture looks a lot more rosy. So that's the context of going into this, and it's really interesting to see the market's reaction to this thus far. We saw a pretty large sell-off in bond yields this week, but it basically gave it all back. We had a somewhat hot PPI print come out the next day as well. But overall, the market seems to be looking past this, which is really interesting to me within the context of everything else. There's some other data points there, but I do want to pause there and maybe Quinn just hear about what was your high level take on the CPI print this week?
Yeah. So going in, all these are relevant to just get a new piece of information to update views. But in terms of like near-term relevance, why does it matter is if it changes Fed path or course of action, which to me, March was already off the table. May was sort of a coin flip, and June sort of a coin flip between those two for the next potential cut. And so it doesn't, like, these prints didn't really have a chance to change the near-term trajectory of monetary policy. So I think that's what the market action this week kind of said. Like, that's why stocks, in my opinion, didn't really care, because we got a very, very strong earnings season, which stocks are priced off earnings, not inflation. So for me, definitely interesting from a directional standpoint. TBD if it's this January bump. They adjust for seasonality, but then there's always a bump in January, I guess. So we need more data to find that out. And oil and commodities are down quite a bit from their January highs as well. So that's something notable. I think the reaction could be summarized. I mentioned this last week. If you just look at the action of lower yield, stronger yen, lower oil last week, was like sort of a slower growth implication by the market. It's sort of the same thing this week, which is, okay, if the Fed's going to hold higher for longer, and this pushes any cutout from potentially May, June to even later in the year, then it kind of makes sense that long duration yield would fall, the curve would flatten, because you're pricing in lower forward growth expectations. So not enough to really spook stocks yet, I guess, but definitely a stagflationary week.
I think there are two trends that are bumping into one another here, which is the disinflationary impulse, basically, that we've been riding for a long time. And then there's also just the amount of fiscal spending that's still going on from the US government, which is potentially being impacted by Doge. I think Doge is one of the more interesting change up our programs that we've seen for a long time. I'm very curious what you guys think about in terms of some of the early messaging that we've got from Elon and how much you think we can ultimately cut. But I think those are the two things that are bumping into each other. This felt like a little bit of a noisy print to me, and it's, again, like Quinn, for everything, completely agree with why I think the market has looked past this. And basically, it had given, in terms of what happened with yields, and also if you looked at buckets of risk like crypto, basically everything reverted within a couple of days. So I think mostly the market kind of looked at this and said, this is not super significant one way or the other. And I think the dynamics that were in play pre this print is basically still the status quo.
Yeah, I totally agree. It does seem like a little head fakey. There's actually an interesting analysis from Anna Wong, who's the economist at Bloomberg, and she always has some really unique takes. And she actually posted this chart looking at comparing the non-seasonally adjusted data for core CPI versus the seasonally adjusted data. And if you actually use the non-seasonally adjusted core CPI metric, you can see it's the first print of the year, so it's just in the left there, the red dot. But it was basically in line with where we were last month. And it's just the seasonal adjustment metric that really skewed things this month, which brings up this, what you talked about, Quinn, which is there's something weird that keeps going on around January. Like this happened this time last year, where we got these really hot outlier prints in January, February, and then it basically reverted right back down. And yeah, it does feel like there's just some weird wonkish post-COVID seasonal adjustment thing that's going on. And when you really dial down to the non-seasonally adjusted data, it does seem like, less of the hot print that it seemed on the surface.
We'll see. Need more information. It's kind of summarizing the macro environment we're in, which is sort of just like way more boring than, say, a news flow rampant, election, or there's a lot of news flow hitting, but you look at all the asset prices, vol is in the gutter, and none of them have moved for 2 months.
I think people are pretty uncertain in general. I would be curious to get your guys' take on just how the market is pricing in the threat of tariffs, or what the market is thinking about tariff-wise here. Because, one thing that feels very different to me is, I would guess that the market perception around tariffs is this is a negotiating tactic. Trump has done this in the past. Look at the 2016 to 2020 presidency. This is what he uses as a, it's madman theory, right? With negotiating. And that's what's proven out with some of these early, negotiations in between Canada and Mexico. But it's interesting to listen to some of the actual rhetoric that comes from guys like JD Vance, who he's clearly identified this as, the campaign platform that the, Trump administration is building is actually reshoring a bunch of jobs, reindustrialization, lower dollar, all of that type of thing. And tariffs are probably necessary to implement that. So, that is something of a discrepancy in terms of what I see, the rhetoric that I see coming out of the administration versus what I think the market is pricing in. But I'm curious to get your guys' take there too.
It's an interesting dynamic where you can tell there's some very smart markets focused people in these rooms. So they're trying to like toe the line between getting at these like classic MAGA style policies of, we want a strong dollar, but it's also like, Scott Bessent was basically said this morning.
Right.
He's like, we want a strong dollar, but that doesn't mean that other countries get a weak currency, which is like, currency pair 101. Like, he's not dumb. Like he traded under Soros. He's an FX pro. Like, he knows what he's talking about. He's just trying to like get both sides happy at the same time. And you see that tension start to get represented. I just have the chart of the Dixie here, which, yeah, I think that the best way to cut through the noise of the ongoing tariff dynamic is just looking at currencies. And it is notable to just see the major breakdown we've seen in the US all in the last 2 days, as we've started to shift from, you can see this big wick from like a week and a bit ago during the Mexico-Canada tariff debacle. And that was the moment where it looked like markets were starting to take it quite seriously and not as a negotiation tactic, but that lasted about a few hours. And then it completely reversed. And now, for the first time, as we've shifted towards this reciprocal tariff thing, which we can get into some more, the currency markets are starting to finally reprice, taking away these tariff concerns, which is really interesting.
There's obviously a strategic angle where they started with Mexico and Canada, who both have significant reliance on the US and are the probably 2 least likely countries in the world to start a big battle, as it would likely have outsized effects on them. And then, the Colombia thing. So Trump's done a very good job, and his team, I think, of staging the cadence of their, quarrels on trade policy. And it's gotten India and Europe and all these other countries to preemptively, in many cases, come to the table and offer compromises. But it does feel too good to be true, to be honest. Like it feels like things have gone too smoothly than what will continue, for years. I mean, maybe this can continue for many months, and who knows? I don't really have a strong view. But when you start to go up against China, Russia, Iran, Saudi, these are countries with, they have to do what's best in their population's interests and what's best for their country and their strategic priorities, which just by definition often will conflict with what Trump and the US is. So I don't think it's going to be that easy, but what has been, I think, assuaging to the market is the fact that in each negotiation, one, tariffs have gotten kicked further and further down the road. And it's very, like you said, it's very clear Besant and the markets guys in the room are having an outsized influence because everything gets walked back, everything gets, kind of massaged to an outcome that's more pleasant to assets. So it'll be interesting though, right? Because somebody along this line in an adversarial position, you'd expect will call bluff. Because if we're noticing these things, the rest of the world's noticing how markets focused he is. For example, the Mexico-Canada tariffs excluding oil or reducing on oil, because everybody knows that inflation is, problematic and the biggest kind of number one thing to solve for here. So it's not, for how markets forward the approaches, it's not foolproof. People also are seeing this, and so you'd imagine there's going to be some push pull. It's not going to just be this easy where everyone's kind of bending the knee out of the gates.
Yeah, it's super interesting from a game theory perspective. I think actually Scott Besant wanted to do a universal 2.5% tariff or something like that. That was one of the ideas that got floated in the beginning. And I can see the other side of things, which is to get some quick wins from countries that you have an enormous amount of leverage over, so Canada and Mexico, and show the rest of the world that you're serious, essentially. But there is, like, if you were to continue this long enough, there's a little bit of a game theory approach here where, the US is not the global, trade SAR that we used to be, right? Like we have a little bit less influence on the trade side of things. And so there is, all it takes is for one, sizable country, maybe it's China or whoever it is, to actually retaliate and basically call the bluff. But it's an interesting time. It definitely will cause for, I think, some more head fakes in the market generally, and probably some sell-offs.
Skale is the blockchain that's truly built different. Forget gas fees and waiting. Skale offers a seamless Web3 experience with fast, fee-free transactions. Whether it's gaming, AI, or next-gen dApps, Skale is here to power your future. Explore more at scale.space/ecosystem and follow them on X at Scale Network. You're super head fakey, especially on like the other parts of Trump's policy, like you mentioned, Doge and everything. Like, it feels like everybody's trying to figure out, like, how much does Trump care about stock market go up versus like some of these like core fundamentals of like, does he really want like an economic golden age? Because to get to that vision that they're talking about is reining in the deficit. It's moving from this world of like artificially inflated economy through QE and all these different weird levers to like, let's just get to like a productivity led economic boom. And to get to that point, like, maybe we need some pain up front, so it's, like if we try to rein in the deficit, if we're, being serious, if he's being serious about the amount of federal workers that he wants to lay off, like, there's talk of, I saw a number, it was like 275,000 federal workers have taken up the offer to voluntarily leave, and that's going to lead into like some weaker jobs data in a couple months time. And these are things that are slowdown factors on the economy, right? So if you're trying to get to this big economic golden age where, Scott Besant wants his 333 thing, 3% real GDP growth that's higher than what we've had over the last year and a half of like this like highly fiscally driven economy. So to get to that point, if you're pulling back the deficit, there's potentially some pain in the interim to get to that point that they want to get. So now we have to figure out as like market participants which side matters more, stock market go up or getting to that point that they want to get to.
I think it's fair to say that like Trump's tweets regarding the S&P 500's price and Dow's price is way lower frequency than ever before. And that's probably also a reflection of Besant being like, hey man, I'll join your team under one condition. You stop tweeting about the stock market every day. But if you just zoom out, these actions are stagflationary. Tariffs, well, there's an open debate on whether they're more negative growth, aka deflationary, or higher, price inflationary. But they're definitely not growth positive, I guess, in like a aggregate way. And then Doge is long-term healthy in the fact that the economy needs to readjust to private sector productivity-led growth versus government fiscal deficit-led growth, but very bumpy in the near term, because if you're laying off the largest producer of job growth in the last many years, that matters. Like those are income losses for households across the country. I mean, yes, maybe they're doing these buyouts, so it doesn't hit till later this year, but it is strange because you would have thought, like a common idea was that they would just tear the Band-Aid off and sort of go full bore on these sorts of measures, which in a way they are, but they're also, the market is just interpreting everything as okay. So, because I think if there's pain to be had, you don't want it to be had in early 26 going into midterms.
Well, one thing that's a little bit of a contradiction about Trump is that the broad perception around him, I think, is that he's bullish asset prices, especially risk assets, right? That's the general perception about Trump. But if you were to take another person who isn't Trump and you were to give all the policies that Trump is talking about, you would say this doesn't actually feel that bullish for asset prices. And I think people generally don't know how to square that circle. And a lot of the stuff, I think we're just going to have to wait and see. And I think that one of the unique things about Trump is that he's probably got the strongest political mandate that any president has had in the last 50 years. And so he might be allowed to talk out of both sides of his mouth for a little bit without getting called out on it totally. And you could view that as a negative, or I think you could view it as an opportunity, right? So the other interesting thing, by the way, about Doge is I didn't really realize this. I guess my information diet has shifted a little bit, but it's one of the more interesting things that's going on in the US right now, where you have some people saying, this is so phenomenal. We finally have a chance to address our deficit and crazy spending and all of this stuff. And you've probably seen some of this data coming out that we weren't tracking or labeling any payments going out of the Treasury, which is nuts. And that's why the Pentagon can't pass an audit. And they're publicly saying things like they're publicly admitting that their assets and their liabilities don't balance, which is super funny. But on the other hand, you see some people talking about this like it's a coup or a takeover of the government, which I thought that was shocking. And I had to go and look, and there are, publications like Reuters reporting it like that, which is crazy to me. But it's it's a completely, people are definitely living in two different, I don't know, America.
Well, when your revenue is getting yanked as a result, not surprising. How much, Mike, how much does Blockworks get from USAID?
We do not get any. We do not get any.
I can continue. I can continue on my forward guidance. I would have had to cut ties.
Yeah, you're safe for now.
Yeah, I would have had to cut ties.
Yeah. Well, they were funding some pretty wonky stuff. We can leave it at that. Like that was I was very surprised to see that.
Dude,
although it wasn't.
Elon's,
yeah.
Go ahead.
Elon's. Yeah.
His interview when he's in the White House with his kid, it was just cracking me up.
Yeah.
Yeah,
I didn't see that one actually.
Yeah, what I will say is like a third party Canadian observer is there's a lot of talk up here of how could Trump be doing these things? Yeah, like the coup idea, and it gets to your point, Mike, about how he has the mandate. Like I'm a fan of democracy. When a president gets the popular vote, you have to respect that that's what the majority of people want. So you can say all these different ideas about coup or whatever, but that it goes against what most Americans want. But like factually, when you win the popular vote, that's what Americans want. So you have to respect that from one form or another.
Well, Trump was the change vote. And I don't know. I've seen this is a strong principle, even working in companies and things like that. You don't really try to fix a big problem until it truly breaks. And I think that is the way that you should be looking at this political situation in the United States, is that finally it got so bad and broke so much that you put a change agent in the White House. And honestly, I mean, Trump is trying to execute on most of what he said he was going to execute during his campaign. So yeah, this is the change agent. There's probably going to be, some good and some bad that comes from it. My hope is that it's mostly good and positive, right? Like,
Felix, how's sentiment up there? You guys coming around to 51 yet, or is that going to take a bit?
I'm about to kick you off this call, man. No, it's crazy. It's actually the one thing that has united Canadians on like the left and the right. Like it's actually quite impressive that there's a single policy that you can have Pierre Poilievre of like the Conservatives and like the most left-leaning people all aligned. There's a few people that are like, bring it in, baby. Give me my American passport. But it is quite impressive to see that sort of unity. So I don't know. Take that as you will.
Good.
I want to circle back onto some of the economic data that came out this morning on retail sales and squared around what we've just been talking about, which is this concern for tariffs. And something that I've been talking about on the show for the last few weeks is trying to figure out whether, we're getting a lot of this upswing positive data in terms of the manufacturing sector. So like the manufacturing PMIs, which, for those that don't look at diffusion indexes, when it's below 50, the economy, or that part of the economy, is contracting. When it's above 50, it's expanding. So despite this positive like top line economic data over the past 2 years, the manufacturing sector has actually just been in contraction for the past 2 years. So that has shifted, and we've seen the first positive above 50 print in 2 years recently. And this is coming at the same time that we're seeing a lot of optimism coming from like the NFIB Small Business Index. And so there's a lot of what feels like front loading of like core nuts and bolts economic data that's coming out right now. And the big question for me is trying to figure out how much of this is either, tariff stockpiling before the tariffs come in, because it would make sense as companies to try to, you saw the PMI new orders prints have been just way above expectations because there's a lot more of new orders coming in to try to get ahead of these tariffs. So for me, I'm trying to figure out, okay, is this the beginning of a new business cycle, perhaps, where, we've floated through the last couple of years from just the huge fiscal dominance we've had, and now the classic parts of the economy are starting to upswing? Or is it a Trump bump and it's a bit of a head fake? So for me, what's really interesting is this retail sales data that came out today, which is, it's a nominal metric, so it's not inflation adjusted, which is really important to understand. But regardless, we saw a huge miss on it today. Came out at negative 90 basis points when the expectation, I think, was like negative 0.1. You can see just in terms of like the economist expectations of it, it was an absolutely just huge miss to the downside. And when you strip out some of these more volatile segments like energy prices and the like, it gets even worse. So when I try to compare what we're seeing in terms of this classic manufacturing data that's been in a upswing ever since basically Trump won the election, with what we're seeing how consumers are starting to act right now, I'm leaning a bit more towards it being just a head fake as opposed to a substantial upswing in the economy. But yeah, I don't know. I'm curious what you guys think. This was a pretty big flag for me here this morning.
I don't have too many strong thoughts yet. I believe that there's these elements of two speeds within the economy that are persisting and will persist in the way that, as a result of the way the Fed has conducted monetary policy. And that is the one thing actually on that topic, it's less related to the retail sales, is with Trump investment targeting the long end, the QRA still being favorable towards bills issuance. That's a very flat, and then the SLR thing, that's a very flattening sort of the yield curve, sort of suppression of long end rates. And a byproduct of that is a stronger market that allows high end rates to be held higher than they otherwise should be, probably for longer. So it's one thing that's not jiving for me is their kind of Main Street economy focus, but everything in the policy perspective is telling me a yield curve flattener, which is bad for small businesses relative to large caps. It's bad for regional banks relative to large caps. Basically the things that were going on in the Biden administration. So that's something I'm watching pretty closely. But it's not surprising to me that the data is kind of wonky, because I believe there's these pockets kind of everywhere.
The way that I generally look at these problems is, what do I think is going on, in boardrooms or in the minds of executives, when they're listening to this tariff talk? I would probably be in the mindset of hedging, honestly. I think it's a weird, obviously you can't really apply that thinking in a uniform way because the different sectors of the economy are so very heterogeneous impact that these tariffs would have. But yeah, I generally think it's probably a little bit noisy. And I think probably this is people trying to front run demand and hedge whatever their costs, like import costs might be. That would make a huge amount of sense to me. So I'm probably slightly more in that camp.
Skale is shaking up the blockchain game. With a gas-free, invisible experience, it's the perfect solution for developers and users alike. Forget unpredictable fees. Skale's innovative model ensures smooth, cost-free transactions, saving users over $9 billion so far. With over 46 million active wallets, Skale is proving itself as the go-to blockchain for gaming, AI, and more. Explore the Skale ecosystem at scale.space/ecosystem and follow the journey on X at Skale Network. Again, I feel like the theme of today's show is just head fakes in different directions. You got like CPI head fake, then you got like manufacturing upswing uptake and head fake, and retail sales, head fake as well, probably a little bit. And that's what's always so hard about, when you get into the weeds of the high frequency macro data every week, you can't just, yesterday, if you rewind 2 days ago, it was like, oh my God, hot CPI print, Fed's got a hike. And now it's like, oh, weak retail sales data print, Fed's got a cut. And yeah, you got to look a little bit more longer time horizon than that, or else you're just going to get whipsawed in every direction.
Well, markets don't generally like uncertainty, right? It feels very uncertain. It feels like there's a lot of different factors that are colliding here to produce both noisy data, but also I don't think people's mental models or pattern matching is, people are probably thinking about what the last Trump presidency is like. They're probably looking at a lot of the policies that are coming out of the Trump administration, which look like they don't necessarily support, what happened last time. And so, yeah, I think there's just a lot of uncertainty at the moment. It probably is just more sideways chop can be expected for a little while.
I don't know if you guys listened through the pain of the Powell testimony this week, which was just filled with, horrible questions and political grandstanding.
But he's trying to get political wins.
Yeah,
things are brutal. But yeah, it was not. I mean, Powell's definitely not in a rush to cut, and you're starting to see like these doves, like that, like Goolsby, and people that are like screaming to cut like 6,000 basis points when the market drops 1%. They're like, wow, we're surprised. It's like, guys, you just cut 100 bips in 4 months into an economy that's growing 6% nominal. Like, we're joking, right? Like, so there's definitely, but if you were to paint a political leaning Fed, you would just do the actions that they've done in the last 8 months, because all of a sudden now they're like super gun shy on
well even Goolsby, like he's changed his tune. Like he was the most dovish like Fed president for the last 12 months, talking about how restrictive we are, and then suddenly a month into Trump's presidency, he's like, oh, we got to be more careful here, inflation's looking a little too durable. And it's just like a complete 180 in his views. And you're like, what changed?
Yeah, they're starting to flip flop more than me. I'm a active trader. I'm not conducting monetary policy for the world's leading economy.
No, for sure. I will say one thing though that is I think validly of concern right now is the liquidity picture. I interviewed Andrew Stella Larson, who does a lot of work on this week on the show, and really what we got down to, and this is something you talked about earlier there, Quinn, about the SLR thing, is as always, like the big theme of macro is, what's the next lever that the powers that be can pull for liquidity? What's the next way that they can kick the can down the road? Because that's just been the theme of the last 15 years or so. And we've had a lot of these can kicks over the last couple of years. They've, been especially strong from, the activist treasury issuance thing that Yellen's been doing, tilting, issuance to bills, offsetting QT with just the reverse repo facility coming down. But a lot of these can kicks are starting to get pretty empty here. We have the reverse repo facility that's like, I think like 65 billion. There's not much left there, right? So they can't keep issuing on that short end and just assume that it's going to be absorbed from there. They can't keep running QT and assume it can be offset like that. But in the same vein, we're getting to this inflection point that the next, logical can kick is the TGA drawdown because of the debt ceiling dynamic. But that's such a weak form of can kicking, because what happens, right? They draw down the TGA, that's like 700 billion. That's all great and all, but as soon as the debt ceiling gets resolved, they have to build it back up again. So I view markets as somewhat efficient, and so I just don't see how they can, price in such a liquidity, wave when that on the other side of this, it's going to have to be rebuilt so quickly. So then it's like, okay, well, we can't do anything in terms of QE. We can't even use that word anymore because it's just been like so politically, taken over to the point where, yeah, it's just not something that you can do with inflation above where it is right now. So then it's like, what do we do next here? So there's more talk about this SLR thing. That's something that Jerome Powell talked about in his testimony this week, which is, just a fancy way of allowing commercial banks to buy more bonds and go through that. And that's probably the lever that comes after that. But I think overall there is a valid concern of wondering, like, where does the next can kick come from after that? We were talking before we started recording about, like, do they just find new ways of saying the same thing in terms of QE, and just how difficult it is to talk about that. But I'm curious, like, what do you guys think in terms of where that next can kick can come from?
I mean, I don't know exactly, but I think that, one way to think about this in general, all of these can kicks and all of these, alphabet soup of programs that they roll out is who is going to be the next marginal buyer of bonds, right? Like that's usually what it is. And QE, the marginal buyer is the U.S. government more directly, right? The Fed. And now they're making it easier for commercial banks. I think the thing that people have largely underestimated when they're thinking about the levers that are available to the powers that be is just how large and effective these levers really are. So I don't know how much they could really adjust the SLR and impact the buying of bonds by the U.S. commercial banking system, but that's a large buyer. And generally, if you've been asking who is going to buy all the bonds for the last 10 years, there's always been a buyer. And so I don't know. I would generally, when people start to ask that question, I think eventually there's merit to that argument, but I would generally fade that when people start asking that question. I think so.
Yeah, I think that's right, because even with a Trump like detente and all this, honestly, progress on the geopolitical front that he's making in terms of ending wars and bringing hostages home and etc. Just because like Canada, Mexico, and some other countries are like agreeing to play nice doesn't mean they're going to rely. It's like, fine, we'll oblige, but we're going to continue down our path of making plans to not be able to rely on the U.S. in a long-term form. So I don't think that the foreign holdings, I don't think that's a big boon, or I don't think it changes just because he's making peace deals. But yeah, Felix, the SLR thing is massive, which I pretty sure I recall like mid to late last year, a Fed presser, I need to look this up, where Powell was like vehemently denying or rejecting like the thought of that as like a, quasi QE or solution in the near term. Maybe I'm mishearing that, but that's the way it's come to the forefront in the last 3 to 4 weeks tells me that that's a Besant directed initiative to kind of get going. But as you point out, okay, we're in this period where like there really actually is not a great liquidity outlook, and the market, everybody and their brother, even like the Twitter Tesla bulls, know what TGA and RRP are now. So like the market isn't going to wait until the last drop of of funding gets pulled from those vehicles to like start pricing in the repercussions. But I guess, they've done a fair enough job of putting these other non-QE QE things into the roadmap sooner, like SLR exemption, that offset the problems that otherwise would be. But again, I just go back to like when you just zoom out and like do the Men in Black thing to all your like memory, and you look at the price action and eliminate all the narratives. Oil down, yields down, dollar down tells me that's a lower U.S. growth prognostication, but I guess yet for stocks to care about it. I mean, rest of world is outperforming U.S., so I guess you could read this as, well, U.S. stocks aren't going to go down because everybody's debasing their fiat in unison, and it just means our relative outperformance versus the rest of the world is going to be less going forward. But with how high earnings expectations and growth expectations are, and the government supposedly looking to cut a bunch of spending with Doge, does seem to be some sort of kind of rubber meets the road ahead with this liquidity outlook.
Yeah, I do think there's a couple interesting nuggets in there they bring up, Quinn, around, like everything was heading in the direction of this SLR exemption thing never being done again. And for those that weren't like in the weeds during the COVID era, they made that SLR exemption occur so that, again, there would be this huge upswing in marginal buyers of US debt. And then they reversed it. And there was a lot of monetary, like regulatory policy that was heading in the direction of pretty much never letting that happen again. Like, SLR exemption never really being a thing that gets turned on again. But now you're correct that we're heading in a complete 180 direction now, where you had Bowman, who's looking likely to be the next nominee for the Fed chair of supervision with Barr coming out. So that'll be a very important role for whoever takes that role, and it's looking like it'll be Bowman. She's talking about making the SLR exemption permanent, and now you have Powell saying during Congress testimony, it's time to do this. That's a complete 180 from a year ago, for sure, in terms of Fed policy. And then you start to look at, okay, well, we've seen in the Scott Besson interview that him and Jerome Powell are having their weekly lunches. They're getting together and chatting, and it's like, okay, well, Scott Besson and Trump, their goal is to get the 10-year down. They've said that quite explicitly. They were talking about, you could totally see a situation where it's like, from Scott Besson to Powell, it's like, hey, look, we're not going to rag you on what you do with the Fed funds rate, but what we would like to see is we want the long rate down. And one of the best ways that'd be great for all of us is to actually bring forth that SLR exemption. So, if you can do that for us, we'll let you be on the Fed funds. We'll let you be on the Fed independence. And, you start to put that all together, a few things start to make sense.
The other thing too, I don't know if you guys caught this speech. I think it was maybe 3 weeks ago, Trump speaking at Davos, and he was tying, interest rates to the price of oil, looking at that. And like that was a link that he made in his head. And I think that one of the other things as well is, whenever you talk about the liquidity picture, the implied question that you're trying to drive at is what are stocks going to do? And I hope it actually be as well that I think there's going to be a lot of deregulation that happens around the US. And actually there's a lot of reasons to actually be very positive in terms of the growth story outside of liquidity too. Like there's deregulation around energy. And then probably the best maybe example to look at US versus rest of world is look at how we're treating AI versus how Europe is treating AI, right? And I'm sure you probably saw there's like some $200 billion investment, but a million strings attached and taxes. And, that's just not going to work or take off particularly well. And, I do remember, one sort of enduring, maybe like if you had to take the bull case, right? Like what were some of these policymakers thinking when they just started juicing the markets with liquidity and injecting all of this fiscal spending over the course of the last 15 years? One of the things that maybe they were hoping for is for new technologies to come out of maybe structurally lower funding costs for the private sector. And I actually just thinking the other day, they're kind of right. They might have actually won on that. Like they got crypto and AI. And whatever your feelings are on crypto as an industry, I think it's be pretty silly to be bearish on long-term AI. And that's probably, we're winning that in the United States right now. So there could actually just be some more structural growth here, outside of liquidity factors too.
Yeah, on that note, like tying in this liquidity backdrop that we talked about, it'd be interesting to hear your thoughts on getting into some of the specifics on the crypto market right now, because you could not paint a more bullish situation for the industry as a whole. But that's not really translating into price. Bitcoin has remained resilient, and it's interesting to continue to see this dispersion. And it's been talked about quite a bit over the last year and a half of like what would happen to this the classic liquidity sequence in crypto has been Bitcoin runs, and then as Bitcoin runs, people will take their profits and go into higher beta altcoins and yada yada yada. But when you silo a lot of that price appreciation and liquidity into ETFs, which are on TradFi brokerages, does that still occur? And it feels like more and more as the industry evolves right now into how it's going, that there's sort of like two different parts of the industry, two different markets in a way. And so during a time where the liquidity picture is pretty weak, like we've seen, altcoins have just been taken out and shot, even though the regulatory front is extremely positive for these. And Mike, you've been very deep in the crypto trenches lately, and I'm just curious, like, how are you thinking about this change between positive headlines, but the price action not matching it?
I think what's going on right now is partially a story of Bitcoin's strength, which we can talk about. I think the ETFs are part of that story. I also think Michael Saylor is a huge part of that story. And then I also think that there are, there are these longer term, very bullish factors, mostly around US regulation, that the market doesn't really care or price in at the moment, but I think are very significant in the longer term. So yeah, like you mentioned, Felix, I think historically what's happened is, it's cryptos are very, there's a lot of beta in crypto, which is, like Bitcoin goes up by this much, Ethereum goes up by this much, and then riskier stuff, it kind of, you move out along the risk curve, but it behaves in a relatively predictable way. And the nice thing about crypto is if you got the timing right, you could basically buy anything and do pretty well. That has not been the story at this time at all. It's been very painful. For instance, if you've been an ETH holder this cycle, you're almost flat. Not really, but almost. You would have had to buy the absolute pico bottom to be up at the moment. And you've had outperformance from protocols like Solana. And I guess if you were in the meme coin trenches in the right names, but the Bitcoin strength story is super interesting. I'd be curious. I think actually a lot of that is Saylor. Like he announced back in October his 21-21 plan. He's going to raise $42 billion, equal split between debt and equity financing. And he didn't really outline when he planned on making his Bitcoin buys, but I think bought almost 21 billion in Q4, 20.5. So almost half of the Bitcoin that MicroStrategy owns now is from Q4, which it sounds like, Quinn, you were on top of that. That was very surprising to me. I did not realize how much he was buying. I would guess the rest of the market doesn't quite realize that either. And so, I would attribute a good amount of the Bitcoin strength to that guy, which doesn't actually make me feel that great about Bitcoin. That, the marginal buyer in 2021 was Michael Saylor, and guess what? It still probably is. And I think a lot of the ETF money is probably fast money, kind of like retail, self-directed. It's not like that structural long-term bid coming from wirehouses and RIAs that we all want. So, but yeah, I think the time is basically never been. It's I think the market isn't going to price in things like a stablecoin bill or fit market structure bill or anything like that. The market wants to see a strategic Bitcoin reserve or a strategic digital asset reserve, and they're not going to get that most likely. But I do think that, longer term, more dispersion and asymmetric outcomes for companies that actually perform is super bullish for the space. So I think you basically just have to be a good picker to do well in that environment, or a trader, or a really good trader. Right?
Yeah, it's weird because this you point out a good dynamic, which like a little bit ago before this carnage in alts, it was I saw it as a very one direction, like sided risk reward to be long Bitcoin and short alts, because you still had the Saylor bid, and these things had been kind of bid up and a lot of leveraging system. But now that they've been flushed first, it is less of an attractive setup for that relative value trade. But in some sense, like a super bearish case could be that alts are the roadmap for a Bitcoin without Saylor. Everybody would push back on you that there's sovereign buyers and state buyers and like getting off zero and all these like flows that everyone tells me are for sure coming and have to come because everybody has to buy Bitcoin. It's like a law now, I hear. But in the bearish case, you could say, well, if there was some sort of equity market hiccup that caused the premium in MicroStrategies, or even let's say 10 other MicroStrategies like Semler and GameStop and everybody and their brother now launching the strategy that, brings competition and reduces his premium and takes him, limits his ability to buy Bitcoin as the premium is at like 10-month lows. You're looking at a much less supported environment for Bitcoin as well. So it's interesting. There's like not any super, I think in the broader whole macro sense, we're in this environment where it's kind of boring. Like there's a lot to talk about, but there's not a ton of, it's just chop. And this might go on for months. Like you just got to keep your sanity while you try and wait for setups that present themselves to be attractive, but it's less and less.
I mean, yeah, tying it to just the pretty gross liquidity backdrop that we painted earlier in the show, like, yeah, you're not going to get that full-fledged alt season. I mean, and it's just interesting to compare expectations versus reality. Like this headline that came out earlier this week where during that Powell testimony, he was asked like, yeah, when would quantitative easing come in? And he was so taken aback by the question, because to anybody that's actually like an operator in that world, you know that quantitative easing isn't a thing that happens until we're already have rates at zero. And then it's like, oh shit, we don't want to go negative rates, so we're going to bring forth quantitative easing. That's the way the Fed thinks about QE. But then you look at like your average alt holder, and it's like they think that like once quantitative tightening is done, we just flip right over to quantitative easing. So there's just like this huge mismatch of expectations. And again, like we said, like never fade the can kicking. They always find a way. That's just the biggest losing trade of the last 20 years. But the fact is that as it stands right now, it's pretty choppy at best. So the most hyper risk assets are the ones that are going to be pulled back first. So it does make sense that altcoins have just been so brutal within this context.
Well, I think that also it's a healthy market dynamic, right? That's actually one of the things that I think is a little bit ironic or funny is that, I mean, you can basically think about crypto as the frictions around issuing an asset and starting a company is like 100 times lower in that space, which means you get a lot of shit, right? You literally get meme coins, which are stupid. But you also get some really great companies that generate cash flows super, super quickly. And it would probably surprise people to know, the amount of aggregate revenue that gets generated from, actual real protocols like in DeFi on a quarterly basis is in the, many billions of dollars. And these things are like, there are lots of things that are way overvalued and very silly, but there are lots of things that are probably undervalued as well. And also because of these dynamics of it being just much easier to issue an asset and get listed, you could probably just expect this trend of many, many more assets coming online as being something that's structural and happens over the next decade. And this is what everyone hates in public markets today, which is that it's just passive is trouncing everything, and you just buy the S&P or like the Mag 7 and it just does super well. The market structure is completely different in crypto, and it's actually much more amenable to, basically being like a really good stock picker and doing a lot of work. So also a lot of that information isn't public, so you can sleuth super easily and find quite a bit of alpha. So just really depends on where you want to play, the type of game that you want to play. But I think this idea that you can just buy a basket of alts and do well is like dead. I don't think that's happening. And I also think, I don't know about this, but I wonder if Saylor might be the ultimate. He might have pattern matched really incorrectly because, everyone is still tethered to these 4-year cycles. And I just think that's not a thing anymore. And that's maybe why he bought so much up front, because I think he had 3 years or something like that to do his 21 buys. And I mean, he did half of it in the first quarter. He had that funding. So yeah, I think he was probably thinking I should front load all my buying when this thing inevitably goes up, but he might have just been wrong about that, to be honest.
I'm also waiting for the day where, like, now that he has the ongoing shelf and he can kind of just sell stock whenever, I'm waiting for the day that he sells stock and doesn't just top blast Bitcoin. Because before, obviously, right, when he would top blast Bitcoin because he would only issue these big convertibles and issuances and debt offerings when his share price got bid up because Bitcoin got bid up, and it was always coinciding with tops when the most momentum involved was in MicroStrategy. But now that he's got this like slow bleed drip capability of the ATM with basically unlimited capacity, like when is a guy gonna like issue shares, raise cash, and maybe just sit on it for a little bit, like instead of just top blasting every time we pump to the, it's like, so that would be interesting too. Maybe never.
What have you guys looked at MicroStrategy's, I guess, finances at all? Like, have you looked at their financial statements?
A little, I mean, nothing crazy.
You're talking the operating business?
Yeah.
Yeah, I mean, it's not doing anything.
Yeah. I mean, my simple framework is that I believe there's enough revenue there to cover the interest obligations on some of their convertibles that were not at 0%. But that's about it, really. On that point of like the financials, I am surprised that he didn't at the time. Like, if you just look at like the premium to NAV, like we were very elevated there in late November, which was coinciding with this huge push in Bitcoin, like Quinny mentioned, and it would have made sense for him to reissue some of those convertibles that they issued at like, I think it was like 2% or something. Like he could have easily reissued those at 0% and almost have like zero interest expense on any of those, but he did it. I don't know if you know of any reason why he wouldn't have done that, Quinn.
Sorry, would have done what?
Like, not because some of those converts, like some of the earlier ones that he's issued, were at like 2%, 3%, or whatever. And during that time, he could have easily reissued them at zero. Like, the new converts he was issuing were at zero. So I'm just surprised that he didn't do that at the time and, strike while the iron's hot and get like he could have got his interest expenses on those converts down to like basically zero.
The market appetite changes, especially with the volatility we've had in rates. So that's definitely a factor in terms of what the market investors will accept. But there's also this element of, how you're supposed to, you want to price an IPO so that the early buyers make money and everybody's happy. It's kind of that too, where if you're building this like convert market or you're a new issuer of a certain type of security or instrument, you don't want to like squeeze the juice out of the rock completely. You want to sort of make sure your first buyers are happy, and then you can kind of tighten those terms over time as things perform in the secondary market and you get people comfortable. So I'd say those are and then there's also the push pull, right? If you can make it more debt like if you have a higher coupon and then your equity conversion option is higher. So there's trade-offs in terms of the structure of the instrument as well that might have changed in his mind throughout that period.
Well, one thing to just keep an eye on, the reason I'm asking about the operating costs, like no one looks at it, right? Actually, funnily enough, you could make an analogy here that strategy is a little bit like Berkshire Hathaway in the sense that its operating performance is completely independent of its share price, right? People look at Berkshire Hathaway as an investment vehicle for Buffett, and people roughly do the same for Saylor. And if you go and read his investor presentations, it's morphed over the years into, basically it's an investment vehicle for Bitcoin. But they actually don't do that much, right? Like this quarter, they did 120 million of revenue, basically break even. And this was a record for them. So, it actually does everyone said, okay, they look at the value of Bitcoin and it's, they have an enormous amount of coverage, right? They report this as like Bitcoin coverage. But the company's not generating any cash flow and they're actually drawing down on their cash. So, actually like a couple $100 million is not a totally insignificant expense based on what their operating performance has historically been. By the way, as an aside, wouldn't it be I was thinking about this the other day because I went and looked at their executive team. Wouldn't it have just put yourself in the shoes of someone who's like the CTO at MicroStrategy or EVP of marketing or something like that, and you're at like a middling, tech company that was going into decline, and one day your CEO comes in and says, "We're gonna buy Bitcoin, and I want you to look at these YouTube videos of Safety and a Moose and like Andreas Antonopoulos, and we're going all in, baby. Like we're betting the whole." They probably would have been like, "What are you talking about? Are you?" And then I actually checked; it's like a 36x. So yeah, they're probably all, sending those Safety and a Moose videos to their family members and shit now.
Well, man, I mean, it brings
What a
up the
wild
point
ride.
it brings up the point of like what can happen when you're the majority shareholder. Like the reason they're probably able to do that is because Michael Saylor can just come in and swing around and say, we're doing this. But like, if you go to a different company where the CEO is not the majority holder, like, yeah, there could have been a different reality where it just got stuck up in corporate governance bureaucracy and never actually happened. But because Michael can just say, either quit or we're doing this, because this is my decision. So
also, I'm not really making this up. He's described getting his board on board by sending YouTube videos. I've heard him talk. I've heard him describe what this process was like.
Which brings up like how difficult it is for some of these. There's like the board vote or whatever for Microsoft to potentially buy Bitcoin, and it's such a bigger battle there because there's a lot more cooks in the kitchen. You can't just get one person in and swing around and do it.
I don't get though. Why would Microsoft buy Bitcoin? I've never really understood why this like putting Bitcoin on public company treasuries made any sense to me at all. I don't think that's going to happen. So
no,
yeah.
Me neither. Yeah, I mean it's just number go up headlines.
Yeah, it was a special people.
GameStop might, apparently. They said they were.
GameStop, I did see that. Yeah.
I feel like that would give MicroStrategy a run for their money in terms of like retail looking to get degenerate, because
I agree.
It's like, oh, my preferred Bitcoin exposure is not through GameStop, because you get this like meme upside and that's sort of like not great for the MicroStrategy premium.
I agree with that. I actually looked at that and I was like, I know that people are going to laugh at this, but this kind of makes sense for their business, right? Like this is
100%.
why people buy their stock, their meme stock. And this
It's
makes
literally
them
their
more
business to
memey.
it's literally their business is to be a meme. Like, so just any way you can make your pitch more ridiculous, that's the world of memes. Like, they should hire Elon too.
Yeah. Get him on
Cliff
the board.
Access is not going to love this conversation. Things, I mean, yeah, just to wrap it up, but if it does feel like, every year, like regardless of where interest rates are at, markets are getting more silly. And I think this drives a lot of people insane because they think it's like, oh, the Fed is too loose. These silly animal spirits are coming forth again. But I do think there's been a fundamental and permanent shift in how a lot of people view markets. And there's still a lot of people in denial about that.
As long as the current game is played, the rules are consistent.
Well, something I wonder about a lot is that people like the market for gambling in general. And I know financial nihilism is the phrase of the day, and people like to talk about that. But it's unclear to me how structurally that, because obviously gambling is just one of those things that's a very persistent part of the human condition. It's not super clear to me how, I mean, people see, like, you've probably seen this number, like how many Americans bet on the Super Bowl. And that grows enormously every single year. I just can't really tell if that's an aberration of the times or if that's something that's structural and going to continue to grow. Because that sort of directly plays into the meme stock.
Totally.
Yeah. Thing too.
Bit of column A, bit of column B for sure. Mike, it's great to get you back on the Roundup. That was a ton of fun.
Guys, Emporium. Thanks for having me back, fellas. Yeah.
Good to see you.
Took my notes. I took my notes. I'll port back.
I hope we get good reviews. Maybe we'll get a special slot at dApps for our good performance.
We should do a little forward guidance, Guys Emporium IRL hang around dApps.
How do we set that up? We got a good community. That Telegram chat is freaking hilarious.
We will get there will be a forward guidance hang. And there's a little shill at the beginning of this episode about getting your ticket. But in case you skipped it, I'm going to remind everybody again to get your damn DAS tickets. Come out to New York. It's going to be a ton of fun. So I bet you all skipped that ad. So I'm saying it here now live. So get your ticket.
They know they have to stay to the end for the alpha. That's where we kind of slide it in. So we should have caught most of them.
Yeah, there you go. All right. See you all at DAS and
good stuff, fellas.
Yeah.